Hey guys, in this video, I'm going to teach you more about mortgage flow hacking. This is probably one of the coolest strategies that you can do with our IUL. You can't do it with any of the other IULs due to the surrender charges, unless you find another IUL that can waive surrender charges. But I haven't found one yet. I've been doing this for a while now. But the idea is to turn your mortgage payments into tax-free retirement income. So this strategy only works for certain people. If you're not making over 100, 120, 150,000 a year and you're not saving at least $1,000 a month, you should hop off this video because it's going to be a waste of time. This is only for people that are saving $1,000 or more per month that this will work really, really well for. This doesn't just work for home. You can use this for business expenses. So it's more of like a mortgage flow, cash flow hack. Now, here's how it works. We know that we could borrow money from insurance policies. The insurance company gives us a loan, and we're still earning interest on the principal because the money's invested index. We all know that by now. But this is how you can actually utilize a strategy within this exclusive IUL so that you can literally hack your mortgage. Let's take a look at this example. Let's say that this is John, okay? And John is 40 years old. Let's say John just bought a house and he has a 30-year mortgage, which is costing him $2,500 a month. And John is currently saving $1,000 per month and he's putting it into the bank. Now, what's the value of John putting $1,000 a month into the bank? Nothing, right? Because basically John is giving the bank $1,000 a month and the bank is lending it out to other people like John for mortgages. And the bank is making all the interest and John's getting nothing. So that's not really a good idea. Now, John is still in the midst of his career and he has a couple of things he needs to worry about. He probably has a family. He has a mortgage. So one thing that he needs to worry about is going to be death benefit, life insurance. In case he dies, he needs to make sure that mortgage is covered. He needs to make sure his family's protected. If John gets sick with terminal illness, critical illness, chronic injury, anything like that, John needs to be able to access life insurance money so that even while he's alive, he can take care of his medical bills and his mortgage for his family. That's really important. So John doesn't have that right now. So what John does is he speaks to Mike or one of the other agents that I coach, and he gets himself an exclusive IUL policy, a max funded one, meaning lowest death benefit, maximum cash value. Now, John tells Mike that he wants to use mortgage flow hacking because he saw it in the video. And he tells Mike he's got a $2,500 a month mortgage, 30 years. So here's what Mike is going to do for John. He's going to tell John, let's build a max funded IUL. And you can start borrowing from the policy after 12 months. So what we're going to do is, since you're saving $1,000 per month right now, John, don't give it to the bank. Let's put that $1,000 a month into your IUL account. After 12 months, we're going to start putting $3,500 a month into the IUL account, which is $1,000 plus the mortgage payment. As soon as John puts the $3,500 in, he's going to take a loan from the insurance company for $2,500. And John's going to take that $2,500 and he's going to give it to the bank and pay the mortgage. So what's happening is John is still paying the bank the money, but his money's going in the IUL first, growing by $3,500 every month plus interest. And he's taking the loan and using the insurance company's money to pay the bank back for the house. At the end of 30 years, all of the money that John would have paid to the bank, which would be about $900,000 over 30 years, is going to be in his max funded IUL, earning on average 9-10%. And at the end of the day, rather than just having his house paid off and having no money because he would have spent the 900K, John's going to have his house all the way paid off. He's going to have a death benefit. He's going to have living benefits. All that money would have been in the IUL growing for the last 30 years. And then he's going to be able to take a large tax-free retirement income. So what makes more sense to you? Should you continue to just do what everybody else does and give the bank all of your money and get your house paid off? Or should you be capitalizing on every single dollar you ever earn and you ever spend while making sure you're covered and your family's covered, whether illness, accidents, or death happens? This just makes sense. So if you're interested in learning exactly how this works and you want one of my agents to build one of these models for you, what you're going to want to do is look below at the bottom of the website. You're going to see a picture of the agent that's going to be servicing your account. And you're going to want to book a meeting and let them know that, hey, I saw Mike's video on the website talking about mortgage flow hacking. Can you please educate and show me exactly how to do that? And they'll build a custom plan based on your scenario, just like we just did for John. And if everything makes sense, they'll let you know what you need to do to get one if you can get one. Thank you so much for watching. Thanks for expressing interest. And just to let you know, every single agent that you see at the bottom of the website has been trained by me, passed all of my courses, all of my tests, and went through vigorous training with the insurance company as well. They are experts in all of the subjects that you see listed on the website. So you can trust that they're going to give you the experience that you need. So go ahead, look below, schedule a meeting that works for you, and please respect the agent's time and your time and make sure you showed up for your scheduled meeting. Thank you so much and good luck to you.